Canadian provinces have initiated significant retaliatory measures against the United States following the recent imposition of tariffs by President Donald Trump. These measures include banning American liquor products, potential disruptions to electricity exports, and restrictions on essential minerals like nickel. Several Canadian provinces, notably Ontario, Quebec, British Columbia, and Nova Scotia, have reacted by banning or limiting the sale of American liquors. Ontario's Liquor Control Board, LCBO, responsible for one of the largest alcohol markets in Canada, has ceased the purchase of roughly 3,600 U.S. products, affecting suppliers from at least 35 American states. Quebec's Société des Alcools du Québec, SAQ, similarly removed American liquors from its shelves and online platforms. British Columbia and Nova Scotia have implemented comparable bans, amplifying the impact across a broader geographical and economic spectrum. These bans directly affect U.S. liquor producers, potentially reducing their market access and profit margins significantly. In a more aggressive stance, Ontario Premier Doug Ford has threatened to shut down electricity exports to the United States. Ontario, a substantial electricity supplier to states including New York, Michigan, and Minnesota, has indicated a readiness to either halt electricity exports entirely or impose a hefty 25% export tax. Such disruptions could notably strain the power supply in northern U.S. states, potentially raising electricity costs, affecting both residential consumers and industries dependent on consistent and affordable energy supplies. Beyond electricity, Ontario has also indicated plans to halt exports of nickel and other rare minerals, essential commodities used extensively in the U.S. defense industry. Ontario reportedly provides up to half of the nickel used by American defense manufacturers, indicating significant leverage in this area. A disruption here could escalate defense production costs and impact broader industrial operations reliant on these minerals, indirectly affecting multiple sectors within the American economy. These Canadian measures come as part of a broader response coordinated at the federal level, where Prime Minister Justin Trudeau has enacted reciprocal tariffs targeting approximately 30 billion Canadian dollars worth of U.S. imports. Trudeau has suggested that these tariffs might escalate further to include another 125 billion Canadian dollars in goods if the U.S. continues to pursue aggressive tariff policies. Such an escalation could severely affect numerous American industries, including manufacturing, agriculture, and automotive sectors, leading to increased consumer prices and reduced competitiveness internationally. The implications for the American economy, particularly consumers, could be profound. Reduced access to affordable Canadian electricity might cause immediate spikes in energy costs, especially in states heavily dependent on Canadian power imports. The resulting higher costs could cascade into broader economic inflation, disproportionately impacting consumers and small businesses already navigating economic volatility. Job losses are also a potential consequence. The American liquor industry, heavily reliant on Canadian markets, faces decreased sales and market contraction, possibly leading to workforce reductions. Similarly, industries reliant on imported Canadian minerals like nickel may face increased production costs and reduced competitiveness, potentially leading to factory closures, job losses, and economic instability in affected communities. Moreover, reduced cross-border trade could create a ripple effect impacting industries indirectly connected to liquor distribution and energy production, such as transportation, logistics, and retail. Given the interconnected nature of North American supply chains, these retaliatory measures could lead to significant disruptions, causing further economic instability and potentially exacerbating unemployment rates. In conclusion, Canada's retaliatory actions in response to American tariffs, including liquor bans, threats of electricity export disruptions, and restrictions on critical minerals, represent a significant economic challenge for the United States. These measures not only threaten to raise costs for American consumers, but also pose a serious risk of job losses in multiple sectors. The escalation underscores the importance of diplomatic negotiations to mitigate economic damage and stabilize bilateral relations.